Oh, snap. You look at social media stocks, and on any given day this past week, it looks like they were either up or down 25%. When you see that type of volatility, it should make you wonder if there's a potential opportunity here. Today, we're talking about Snap stock. If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Snap. SNAP is the ticker, though I did own stock in Facebook. FB is the ticker. So for context, Snap stock dropped 25% following Facebook's weak outlook, but then proceeded to rally nearly 60% the next day when they reported their fourth quarter 2021 results. A few thoughts on this. First, this is a really, really unhealthy market. It reflects how investors are skittish and eager to sell because of the increasingly fragile macro setup. So investors are looking for a reason to sell, even if it's not directly tied to the business. So this is going to be a type of market that sets aside the folks that say, hey, I'm going to hold on to this because there's fundamental value, versus the folks that are like, oh my goodness, I'm just going to panic out of here. So that is something really important for you to think about in terms of every company you own. You should have a clear understanding why you own it and why you feel comfortable with the current price. That's a key aspect for you to think about. I'd argue another core, part from looking at this type of daily volatility is that the stock market is a market for stocks, meaning there will be opportunities for individual security analysis, asking questions like, what's the value of this business? What's the potential upside that you're playing for? It's not just saying, oh, the whole market's going down. What's this one individual? Go one company at a time. What's the potential? What's the risk reward when you start thinking about individual businesses? And so why did Snap rally so much? First, when you look at this rally, it's important to have some context here. The Snap stock fell 70% in a few months. So this 60% rally in a day is actually still well below where Snap was just a few weeks ago, about 55% lower. While Snap likes to playfully spin themselves as a camera company, it sure smells like another social media business. They have about 5 main screens when you pull up the app. This includes a map, communications, so talking to your pals, camera, stories, and spotlight. And their story segment remains their largest driver of revenue. They've got nearly 320 million daily active users, of which 200 million are engaging with augmented reality every day. That's amazing to think about and suggests early signs of the metaverse are already here. It's interesting because you see a company like Facebook say, hey, we're going all in on the metaverse. We're going to change our name. And it's almost like Snap is saying, hold my beer. We're already building out these tools. We're already, seeing it. Hundreds of millions of users are interacting with augmented reality to enhance their daily life, every day. And, here's one example where Snapchatters play with augmented reality lenses more than 6 billion times per day on average. Now, that strikes me as a really weird and high figure. And so I was skeptical at first, but let's do a quick back of the envelope math, which is, 200 million daily active users for augmented reality. This implies that they try on, let's say, 30 different lenses or filters each day, at least 30. And so, maybe, you're trying on something and you're going, one of these young ladies, they want to try on a digital dress. And that's something that's, recently Snap showcased, Dress X augmented reality filter for people to wear 100% digital clothing. So this is an example where maybe if you have dozens of selections, you go through it and you go, no, I don't like this, I don't like that. And so that 30 plus lenses each day might be just scrolling through a bunch of different options and then picking something like, oh no, I don't like this. But when you think about digital clothing, it might seem absurd right now, but this could be a real market over time as people pay to wear digital versions of, let's say, designer clothes that they wouldn't be able to afford in real life, or just wear cooler stuff in their Zoom or other video chats. I mean, maybe, people would pay you to say, hey, I'd really like you to wear this, or, I'd like to wear an Unrivaled Investing t-shirt or something like that. Or people would say, Daniel, I want to pay to see you wear this funky hat or something. I don't know, but it does strike me as having a possibility. And they also call out how augmented reality can also provide greater confidence when making a purchase, leading to potentially fewer returns. They talk about 25% 5% decrease in returns when you have an augmented reality guided purchase. And they talk about case studies, using, AR for accessories like glasses. They have Zenni Optical affordable eye care, or watches or cosmetics. Oh, this is what this is what it would look like. This lipstick would look like for you. And unlike Facebook, which is seeing user saturation in North America, Snap is smaller and is still growing sequentially and in all their cohorts. Not only are they growing, their rate of new daily active users is accelerating. You can see how they had this big deceleration in 2018, but then they started picking it up again, 9%, 19%, 22%. This is a really interesting data point, as it suggests their core value proposition, perhaps geared towards a younger demographic, is rapidly gaining global acceptance. And not only has it resulted in faster daily active user growth, but along with more users, as you would expect, their revenue growth has also accelerated really nicely as well the last few years. Now, similar to Facebook, at this point, Snap's business model is based on ad spend, and you can see there's a lot of creativity that goes into this ad spend. I mean, there's a lot of different formats. It's not just showing one given type of ad. You might have an augmented reality lens or experience. Here, it looks like one that's sponsored by Walmart, or let's say a filter that's sponsored by Chick-fil-A. So you can see a lot of different types of, engaging ads. So it's not just, I got to watch this thing and get out of it quickly. And they're clearly winning major brands like Johnson & Johnson, McDonald's, and General Motors. So with the stock falling on this wild roller coaster this past week, and yet still down about 55% below its highs, what's the valuation look like? What are investors potentially playing for? First, a quick plug. If you're interested in joining a community of fellow investors looking to learn and find exceptional companies, we have an exclusive community on Discord. You can sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. Also, if you enjoy videos like this, please make a point of hitting that thumbs up, hit that subscribe button. So, looking at Snap, they have approximately 1/10 the user base of Facebook's family of apps, but only around 3 to 4% of their advertising revenue. So similarly, they have less than 2%. So Snap has less than 2% of the US digital ad market, but they reach nearly half of US smartphone users. So Snap's pathway towards continued strong growth seems likely just based on these sort of asymmetric aspects. Another way to visualize this is that in North America, Snap's average revenue per user is around $29 versus $274 for Facebook. So Facebook's users generate a lot more ad revenue for Facebook versus Snap. And this also does strike me as having significant potential for future growth, as Snap either shows more advertisements or just gets better bids, higher bids for their advertisements. But it can also be a reflection of the fact that their user base skews on the younger side, where there's less advertising demand for, let's say, 13 to 34-year-olds that have less or potentially no disposable income compared to older demographics. Now, most critically, unlike Facebook, which is projecting 3 to 11% growth in the first quarter 2022 because of a combination of competitive pressures, they call out TikTok, and privacy changes with Apple's iOS changes, Snap is still expecting to continue to expect hyper growth around 35 to 40%. So does this mean Snap is navigating these threats better? Or is it just a function of being much, much smaller and earlier on their journey to user monetization? I don't have a great answer, but based on management's commentary, my hunch is that their competitive positioning is less threatened by TikTok, and ultimately they're less saturated than what Facebook is, and their tools to help measure the return on investment for direct response advertisements offset much of the impact that they saw with Apple iOS privacy changes. And they talk about how the macro headwinds we anticipated entering the quarter materialized largely as we expected, but our direct response advertising business began to recover from the impact on the iOS platform changes quicker than we anticipated. They once again talk about better than anticipated demand from direct response advertising partners, and our direct response advertising business was once again the largest driver of our growth. We observed that advertisers began to recover from the initial disruption caused by the iOS platform changes and the resulting impact on the ability of our advertisers' partners to measure the results of their advertising investments. So it really does sound like they navigated this iOS change potentially better than Facebook. I'd love to hear your thoughts if you have any. As we move to valuing Snap, while they're growing faster, talking about continued hypergrowth in 2022 potentially, it's interesting how much worse their financials are. For example, their gross margin is under 60%. Admittedly, it's been improving each year, but still in the 50 percentiles, mid-50s percentiles. Now, this is partially due to higher content costs as well as infrastructure expenses. They run at significant losses as well, as you can see here. $700 million in operating loss in 2021. Now, investors in Snap need to recognize they're not going to be looking at real profitability and real free cash flow when you exclude stock-based compensation for likely years to come. And this should warrant an extra discount in the valuation given how unprofitable they are currently. They'll talk about adjusted EBITDA being break-even or profitable, but that includes significant stock-based compensation, which is a very real expense. Even though Snap stock has been extremely volatile recently and it's down significantly from its recent highs, given the dynamics I've discussed, lower margins, unprofitable, albeit higher growth partially funded by issuing more stock, it's hard for me to pencil out a really attractive upside from here, maybe 100% over the next 5 years. Now keep in mind, this is a hypothetical framework. Of course, the stock price can go way higher or lower, depends on execution and sentiment as always. Given their recent and expected growth, I have to give them credit for solid execution. That said, they're still, once again, unprofitable, have lower margins, and if Facebook can eventually buckle under competitive pressures, why can't they? And I think ultimately that's another reason why you saw those social media stocks fluctuate so much this past week, is this core question of, do they truly have an unrivaled advantage, or can a new upstart app eventually disrupt them in the years ahead? I'd love to hear your thoughts. Please leave a comment below. And if you enjoyed this video talking about Snap, please make a point of hitting that thumbs up and hit that subscribe button. Thanks so much for tuning in.